Good morning, Internet Netsians and worldwide people. It's Venture Daily, your number one place for venture news every day, venture deals every day, and technology opinion with me. I hope you guys are having a wonderful day. I love being a part of your day. Check it out, guys. Man, I'm telling you, we got a great show for you today. Man, what's going on with SoftBank? Now, I'm sure you've heard the news, but it seems that Masayoshi-san from SoftBank Group and their Vision Fund is pulling out of deals. Now, this has huge ramifications, not only for the startups themselves, because there's hundreds of millions of dollars of term sheets and promises that they've made, but there could be the network effect, right? How is this going to change the culture of venture capital? How is this going to affect the deal flow? How is this going to affect the network effect? How is this going to affect the VCs? Guys, this is a big deal. And, in some ways, I'm not gonna screw the pooch just yet and give you guys the TLDR, the back end, but I'll tell you, I think that this is kind of, in a weird way, somewhat healthy for the venture capital world. You might disagree with me there, and here's a horn for that. But I'll let you know my thoughts at the end of it. So we're going to be going over the news around SoftBank pulling out of $100 million deals with multiple startups. Then we're going to go over venture deals for today, which is January 9th, Thursday. So obviously, got to know where the money is going and where the money is flowing. And I'm going to talk a little bit more about stoicism at the end of today's word. Let's get right into it. Smash the like button, subscribe. Check us out, guys. I'm glad you're here. Let's do it. This one's from Axios. Thank you so much for dropping it. Scoop. SoftBank Shafts Startups. SoftBank Vision Fund has walked away from investing in several startups months after submitting term sheets worth hundreds of millions of dollars. And promising that closing delays are only temporary, Axios has learned. So why does it matter? Well, this highly unusual behavior, even for the idiosyncratic SoftBank, and threatens its ability to invest in highly sought-after companies. SoftBank, which has invested record amounts into startups over the past few years, confirmed that it is, quote, regret over these situations. The, quote, hurry up and wait is how numerous sources describe negotiations with SoftBank, saying that the process was time-consuming, expensive, and ultimately fruitless. Now, as an founder who's received venture funding for my startups, I will tell you that the, quote, hurry up and wait methodology of financing and venture funding, I would say that in my 10 plus years of this, it's kind of been the same. It's kind of always been that way, where there's so much onus and so much pressure on the founders to hurry up, get the decks in, get the legal work done, get the diligence done, get all this stuff done, and then you're just held up on the line, and you end up succumbing to the time schedules and to the mismanagement sometimes and of time from the venture funds. They just don't care. So this whole idea of hurry up and wait, I just think that's that's the norm for this industry in many ways. And this is one reason, if I may say early in this segment, this is one reason why I think this is kind of good. It's showing how dysfunctional the venture capital world really is. And that's one of the reasons why we're here. We're the only Venture Daily show on the planet that does daily news every day. We want to improve venture media. We want to improve venture capital. And so this is one of those things. Hurry up and wait. Let me see, what's the one I want to do? Gotcha, bitch. That's pretty much been my experience. Let's continue on with the article. Honor is a San Francisco home care company for older adults that's raised over $100 million from firms like Andreessen Horowitz, Naspers, and Thrive Capital. It received a term sheet from SoftBank in mid-November, with subsequent reports putting the deal size around $150 million. SoftBank CEO Masayoshi-san gave his blessing during a meeting at his Woodside, California estate with Honor CEO Seth Sternberg. Per a source familiar, quote, SoftBank kept saying it had to run some process stuff before getting the term sheet fully signed, but said they wanted to get funded by year end. So it started confirmatory due diligence, law firms, background checks, E&Y, Ernst & Young, going through stuff, etc. There was no reason to think that there was going to be a problem. SoftBank killed the deal 1 week before Christmas. Ooh. That sucks. Merry Christmas, bro. SoftBank killed the deal 1 week before Christmas, telling Honor that Sun had changed his mind. Sun did not personally communicate his decision or rationale to the company. Saddington is a San Diego-based maker of B2B sales software that raised over $180 million in VC funding, most recently at a $1 billion valuation from firms like General Atlantic, Jackson Square Ventures, Lightspeed Venture Partners, and JMI Equity. It wasn't looking to raise money, but over the summer, SoftBank came in with a term sheet that was hard to refuse. High valuation and opportunity for early investors to sell some secondary stock, and promised to take Saddington into Japan. Now, when I first read this, I felt so bad for this company, Saddington, because I've been there before. I've been there when you just don't know the unknowns of intentions. When you've done all your pitches and you're starting to get term sheets, and then another big game hunter comes into the mix, and you're wondering, should I say no to these other term sheets, or I go with this because of the optics, because of the perception, because of the name brand, because of all sorts of vanity metrics that don't really matter. And every time that I've had to go through this decision, it's always been, are these the people that I trust? Are these the investors that I trust? Do they have good character? Do they have good morals? Do they have good ethics? Do I like them? Do I feel like they're going to actually provide me value? And then I'm going to be honest here, and then have all that set in place. Be like, okay, got the right investors, great people. They're going to provide value. They're going to help. They're going to make sure that I'm well taken care of to the best of their abilities per the promises they've made. And then boom, 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 boom.
Nope.
Someone else comes in. Bigger name, bigger optics, bigger presence, bigger checks. And what they do is they completely throw off the founder. The founder's just like, oh man, I got these great relationships here, and they're giving me, I'm making some numbers up. They're going to give me 10 million here, but these guys coming in with 20 million. I feel bad for you, Saddington. I feel bad for you, son. I feel bad, man. I understand how this works. Right? They suck you in. They suck you in with the power, man. The two sides struck a deal by early August, Saddington and SoftBank, with CEO Doug Winter getting Sun's initial okay via a phone call. Quote, it was originally supposed to be the last company for Vision Fund 1, but SoftBank kept dragging its feet, so suddenly it's supposed to be the first or second deal in Vision Fund 2, says a source close to the situation. Winter traveled to Japan in October. Is that when I traveled to Japan? I think I was there too. And for an all-in-person meeting with Sun, after which Saddington was given 3 more boxes to check. Not substantive things, but busy work to make things last longer. The deal died shortly after. Third up here is a company called Creator. Creator is a San Francisco-based developer of hamburger-making robots, whose backers include Google Ventures and Khosla Ventures. I remember hearing of Creator earlier, and there was a lot of the pundits around this startup, and they're going to take the jobs. Well, I mean, we're making hamburgers, guys. You don't need a college degree for that. SoftBank signed the company to an exclusive 6-month term sheet for a round that was many multiples of the $25 million it had raised to date. Totally screwed, quote, is how one source close to Creator refers to what happened next. Like with the other examples, it was unexplained delay after unexplained delay, and at one point said it wanted to add a co-lead investor. The company pushed back, and SoftBank agreed to wire between $10 million and $15 million as a show of good faith. But the hurry up and wait persisted, and multiple sources telling me last month that the original deal was dead. Things may have changed since, however. The source close to SoftBank says negotiations remain active. But I'll tell you, it's probably not going to happen with all this negative press. Or maybe it will happen. Maybe it will happen. Let me know in the comments below what you think. Company and investors all declined to speak on record when contacted by Axios. What's the big picture? Well, SoftBank's reasons for its reversal are unclear. Some sources believe a driving factor is SoftBank's struggle to raise Vision Fund 2. In short, outside money still hasn't materialized. Or Vision Fund 2 so far has done 5 deals, although that all appears to be via SoftBank Group's $38 billion commitment to the fund. They also think that the WeWork debacle played a role, creating a sort of a shell shock in Tokyo. So what are they saying? SoftBank sent Axios the following statement. Given we're a fiduciary and investing very large amounts of capital, our investment process is more rigorous than unregulated investors and typical VCs. There have been a few cases where our process took longer than anticipated, which we regret. We're always upfront with founders about what to expect, and we try to keep them informed every step of the way. So what's the bottom line here, guys, for you? Well, this is one of the startup's most valuable assets, and several startups and their CEOs have been robbed of time by SoftBank's actions. Well, thanks so much, Axios, again, for the article. Let me give you my 2 cents on this. And again, I'm just the only venture capital daily news show, and so my opinion doesn't really matter. But I will tell you this, in my opinion. I think this is some blowback from the WeWork explosion, or rather implosion. You see, money is a commodity. Money is a commodity in the venture capital world. Venture capitalists are easy to recognize this, and founders should recognize this because you can get money anywhere. The question always is, as an operator founder, is who do you actually want to work with? Are they good people? Are they trustworthy? Are they more than just big signals, big perceptions, big optics? Are they real people with real good intentions that are actually going to provide value to you and it might sound funky to say this, but do you actually click with those people? Look, SoftBank is so large. It's such a large investment firm. And large investment firms can be, let's be honest, not as personable. They don't give you the time and attention that smaller venture capital funds, smaller venture capitalists give. And so, because of the implosion of WeWork, you know what? And remember, guys, I come from a long history, 10 plus years of executive consulting, right? Large business, Fortune 500s, Fortune 50 companies. Look, when a huge debacle like WeWork hits a company, it's reaction time, baby. It is reaction time. The senior executives are miffed. The management is miffed. Middle management feels the pressure of the executive management to change things, to make things better. And what happens is now everything gets put under this ridiculously large and very specific microscope, okay? And so smaller, not as impressive projects get killed because it's just, whoa. Well, we had a major implosion. Executives are all running around, hair on fire. Middle management's feeling the pressure, and now they've been told to look even deeper into the deals that they're working on, even deeper into the projects. And you know what? Self-preservation ensues. And so what does middle management do? What does executive management do when it comes to self-preservation? Well, you know what? WeWork blew us up. I can't be the next WeWork. I think this idea is great. Let me scroll down here. I think this idea is great with Creator. I think this idea is great with Seismic. I think this idea is great with Honor. But there's a lot of unknown unknowns. And as you all know, the startup game is basically a crapshoot. And so since I don't want to be the next WeWork, I'm not going to put my relational equity on the line. I'm not going to put my career on the line. And you know what, Honor? You know what, Seismic? What's the other one? Creator. You know what, Creator? We like you, but I'm not going to put my skin in the game. That's what I think has happened. This WeWork debacle, this WeWork implosion has sent ripples across the venture capital landscape, and especially at SoftBank. I bet they're talking about it all the time. And so because of that, All these other companies, you're going to be put on notice. You're going to be put on hold because people are people, and they don't want to risk their careers over a WeWork, explosion. That's my opinion. That's my 2 cents. I could be wrong, but having seen the inside, the guts and the glory of large institutions and large companies as a consultant, this is what I'm thinking is happening. It's reactionary. It's a reactionary world in this company, SoftBank, and they're trying to mitigate risks as much as possible. You let me know your thoughts down below in the comments or reply to our daily newsletter and let me know what you think. Am I wrong? Is it wrong for SoftBank to do these types of things? One last thing before we go to commercial break. I think this is a good thing. I know it sucks for Creator, it sucks for Seismic, it sucks for these companies that are getting shafted and all this time. And I get it. But I'm also going to tell you this. Being an operator founder myself, I've been through it. I've been through months of no response, of not getting the information I need, getting put on hold indefinitely, and feeling like you're left out in the cold. Bro, sis, this is what you signed up for, being an entrepreneur. This is what you signed up for, being a founder. Yeah, does it suck? Absolutely. Do deals fall through? Absolutely. You might need to check yourself before you wreck yourself and realize this is the game that you signed up for. And the wah, they promised. There's only one thing that you can control, my friend. It's how you respond. True startup story, guys. You got it. Your company just got seed round financed. Congratulations. You're going to the moon. But now you have to scale. You found great talent out in California, New York, Georgia, and even Eastern Europe. So what communications platform will you be using to ensure your international team is always aligned? Well, the answer is easy. Slack.com for Teams. We've used Slack for all of our previous startups, and they've supported us in tremendous ways. And we want to give them a thanks today for supporting vchunting.com. Did you also know that Slack is a great tool for personal use? Yeah, I use my own personal Slack channel to drop in documents, notes, to-dos, and follow-ups to ensure that my workflow throughout the day is right on course. I promise you, if you try out slack.com for personal use, you'll end up using it for your team as well. Go to slack.com to check it out. Welcome back to Venture Daily, the #1 fastest growing, that's right, fastest growing daily news show in venture capital and venture media. Man, it is great to be with you guys. Connect with me on Twitter at AgilePeter. Now, I've received some feedback, and some people have said, "Oh, what's going on, man? What's going on? You've changed your Twitter handle." No, I just wanted to make sure. I just wanted to make sure that I made an easier Twitter handle because we got a lot of programs. We got a lot of segments. We got VC Hunting. We got Venture Daily. We got the Daily Hunt. We got even more segments and new things coming out. And so I wanted to have a more generic, I guess, handle for Twitter. So follow me on at AgilePeter on the tweeters. Make sure you also check out our daily newsletter called the Daily Hunt. I'm always posting up tons and tons of links of what I'm reading every day so that you can have news that you can use. Let's go on to venture deals for January 9th, 2020. It's always important as a venture capitalist or founder or the entrepreneur curious to know what's going on in the market. Where is the money going and where is the money flowing? Vayar Imaging, an Israeli-based developer of 4D radar imaging sensor technology, raised $109 million in Series D funding. Congratulations. Cloud Factory, a Durham, North Carolina-based provider of managed workforce solutions for artificial intelligence, raised $65 million in funding. FTV Capital led the round. Cha-ching. Vouch Insurance, a San Francisco-based platform offering business insurance for startups, today raised $45 million in Series B funding. Y Combinator Continuity led the round. Not bad. Aerospike, a Mountain View, California-based provider of real-time NoSQL data solutions, raised $32 million in Series D funding. Triangle Peak Ventures led the round. Fermented Sciences, nice. Fermented Sciences, a maker of organic hard kombucha, brand Flying Embers raised $25 million in Series B funding. Ecosystem Integrity Fund and Power Plant Ventures co-led the round. It's funny because I actually saw a funny tweet the other day. Some lady, some venture capitalist, she was talking about how she doesn't understand why kombucha companies are getting so much money. She was like, kombucha isn't that expensive. Why are they getting so much money? Well, Fermented Sciences, $25 million in the bank, baby. GoXPD, a Houston, Texas-based e-commerce supply chain and analytics company, raised $25 million in Series B funding. Top-tier capital partners led the round. Starburst, a Boston-based company focused on redefining the modern data warehouse architecture with its enterprise-ready Presto offering, raised $22 million in Series A funding. Not bad. Starburst, nice name. Proletariat Inc., a Boston-based independent game developer, raised $25 million in Series C funding. That's where that name sounds familiar. Gaming developer. Take-Two Interactive Software Inc. led the round. Wellframe Inc., a Boston-based provider of digital health management solutions, raised $20 million in Series C funding. Blue Cross Blue Shield Venture Partners led the round. Cognito Inc., a Palo Alto, California, and Israel-based cybersecurity startup, raised $18 million in Series A funding. Lightspeed Venture Partners led the round. Active Navigation, a UK-based data privacy and governance software provider, raised $11 million in funding. Mobius led the round. ZecOps, a San Francisco-based cybersecurity firm, raised $10.2 million in seed funding. Investors include CEAS Investments, Evolution Equity Partners, KPN Ventures, and Plug and Play Ventures. Cha-ching. Pensa Systems, an Austin, Texas-based developer of autonomous perception systems, raised $10 million. Signia Venture Partners and ATX Venture Partners co-led the round. Paralego, a London-based streaming service for educational books, raised $15 million in Series A funding. Series A funding. Investors included Charlie Songhurst, dedicated VC, Thomas Layson. Cha-ching. Tridge, interesting name. Tridge, a sourcing platform connecting agriculture importers and suppliers, raised $5.5 million in Series A funding. Investors include Activent Capital, SoftBank Ventures Asia. Cha-ching. Interesting name, Tridge. Acquire, a San Francisco-based enterprise platform, raised $5.4 million in seed funding. S28 Capital led the round. Shield Compliance, a Seattle-based provider of compliance management platform to financial institutions serving legal cannabis markets, raised $5 million in Series A funding. Congratulations. I'm going to check this out because it has to do with that higgity hemp. Simplifying cannabis banking. Nice. Now, one thing that you guys might not have known is I've been involved in this industry, the cannabis industry, for I guess we're going on 5 or 6 years now. And this has always been one of those things that's been really interesting around the marijuana and the cannabis industry is banking. Because in the early days, still is today, it's a cash business. And because of the laws of our nation and the laws of certain states, it's hard to actually do business. And so banking in the wiggity weed world
Smoke weed every day.
Is a big issue, is a big deal. So that's cool to know. Shield Compliance, I'm going to check that out a little bit later. Causally, a London-based AI company teaching computers to read, understand, and interpret all biomedical knowledge, raised $4.8 million in Series A funding. Pentech Ventures led the round. Nice. Bunch, a New York-based party app for mobile games, raised $3.85 million in funding. Investors include Supercell, Tencent, Riot Games, Miniclip, and Copal Next. Remrise, a sleep care brand, raised $8.2 million in seed funding. Founders Fund led the round. Cha-ching. Dream Games, a Turkey-based mobile gaming company, raised $7.5 million in seed funding. Makers Fund led the round and was joined by investors including Balderson Capital Not bad. Studs, a New York-based ear-piercing company, raised $3 million in funding. First-round capital led the round and was joined by investors including Lara Hippew. Studs. That's cool. Let's check this out, guys. Studs. I'm telling you, I mean, every time, say hello to a whole new you. Get pierced. I don't understand, guys, and you can leave a comment below, but I seriously don't understand why people want to pierce these parts of their ears. Like these they're so fleshy. They're so like, that's a big owie, as my kids used to say. That's a big owie. But you know what? Just because I don't understand it doesn't mean I hate on it. I'm not hating on it. I just don't understand it. It just seems like it's such a big owie. Okay, that's where I'm coming from. My kids would say it's a big owie. And last but not least, guys, on your venture deals for Thursday, January 9th, Kimai, a London-based fine jewelry brand, raised $1.2 million in seed funding. Talus Capital led the round. It's always great to know where the money is going and where the money is flowing. Maybe someday your startup, your fund, will be on this list, and I'll be talking about you. Who knows, guys?
Did you know that there's even more value than just audio or video? Follow us on Twitter, Instagram, TikTok at VC Hunting, and make sure to sign up for the VC Hunting newsletter, where you'll be able to get weekly news on venture capital, startups, founder stories, and the occasional wisdom extracted from Peter's brain. Go to vchunting.com to sign up. And now, back to the episode.
Well, in today's final word, I want to talk about this SoftBank. I want to talk about this SoftBank issue that's happened, and I want to give you my 2 cents, even more than what I talked about previously. Number one, I think this is a good thing for the venture capital market. It's a shakeup. It's good. Venture capitalists have had it way too easy with momentum investing, with the network effects, just riding the coattails of other big venture capitalist funds. It's just too easy to slosh, as Vitalik Buterin would say, sloshing that money around. It's just too easy. It's just too easy these days. And to be quite frank, as I've been in this world for a decade plus, what makes a venture capital? What makes a venture capitalist these days? There are thousands, tens of hundreds of thousands of these guys, these gals, popping up all over the world. And we frankly just don't know if they're actually quality. Now, some would say, well, there's systems for that, like Angel, Angel.co and AngelList. And these, no, actually, LinkedIn, no, actually not. There is no system. This is one of the things I'm actually working on. But there is no system to actually rate venture capitalists. We don't know if venture capitalists are actually good. We don't know if they're actually worth their salt. And this type of thing puts venture capitalists on notice that, yeah, SoftBank exiting out of deals, this increases risk for the smaller firms. This is kind of a good thing. It means do your job, be helpful, differentiate yourself amongst the thousands of other places that I could get money from. I think this is a great thing. Number two, this is a great reminder to the whiny founders out there who have gotten capital, so maybe not easy. I don't think there's any founder that's ever gotten money easily. It's just easy for funds to give money. But for founders, this is another wake-up call to stay true to the game, to stay true to who you are. What's the amor fati? Amor fati? Love the fate. Right? Memento mori, which is another stoicism idea, right? You're going to die. Don't spend too much time worrying about what happens. Don't worry about it. It happened. Shit happened. SoftBank exited out of the deal. The venture capital fund that you put all your hope in exited out of the deal. They shook your hand. They said they were going to do it. They even gave you a term sheet. And now they've exited out. They've removed themselves from the game. You're no longer playing. You're left holding your heart in your hands. Move on. You're going to die. Memento mori. You're going to die. Don't worry. Don't put narratives into these situations where they don't need to be. I've been in these positions, so I completely feel for the people, for these founders, for these issues. I've been there. I've been shafted by venture capitalists. I've been shafted by operators, founders. I've been shafted by lots of different types of people. But don't worry. Keep grinding. Understand your vision, your purpose, your goals. Let all that stuff go past. Memento mori, guys. You're going to die. Amor fati. Love, lean into it. Love the fate that you've been given. Enjoy it. Work through it. But don't worry about it. The future is not here yet, so you don't need to worry about that. The past is shitty. You don't need to worry about that. Enjoy what's in front of you today. Keep working. Keep working hard. Keep working for your dreams. The right people will recognize your work. So that's my final thoughts for today on this whole SoftBank issue. Number one, I think it's good for the overall market. It's a shakeup. Good. Let's get some more negative press in the venture capital world, so people start thinking about how to improve the venture capital world. And number two, if you're a founder and this story resonated with you because you got in the shaft, good. Work harder. Work smarter. Show them that you're not going to give up. And trust me, you'll see the light at the end of the tunnel. You'll see the light at the end of the tunnel. Guys, thanks so much for being with me today. Subscribe. Let me know your thoughts in the comments below or reply to our daily newsletter. I love being a part of your day. It's great to be here, and I'll see you tomorrow.